Welcome back to another Algo Trading vlog. Last week, we backtested a statistical arbitrage strategy between Goldman Sachs and Morgan Stanley, and the backtest results were pretty good. So over a weekend, I've coded a live trading bot, which will trade with interactive brokers on their TWS platform, and I funded the trading account with 25,000 euro. And throughout the vlog, I will share my profits, my losses, my feelings, and hopefully we'll have some profit by the end of the video. Let's start trading. So today is Tuesday, 26th of August, and finally the trading bot is running live. So on the right side, you see the TWS platform by Interactive Brokers, where I funded the account with 25,000 euro. And on the left side, we have our console where the trading bot is running. So this trading bot is trading the statistical arbitrage between Goldman Sachs and Morgan Stanley. And let's now go to our web application where I can explain the strategy more in detail so you guys understand what we are actually trading. On this chart, you can find the historical spread between GS and MS. We're using the hourly time frame over the period of 90 days. So let me just disable some of the indicators. The blue line is the historical spread, and it is using the ratio 1:5. So for every unit of Goldman Sachs, we're buying or selling 5 units of Morgan Stanley. So for example, if I were to buy the spread here, I would buy 1 stock of GS and sell 5 stocks of MS at the same time. So now let's have a look at the simple moving average. So to complete the Bollinger Bands, we just compute the 40 period simple moving average. And we're also using the 40 period lower and upper band, which is 1.75 standard deviations. So for a current setup, let's look at more recent historical price. So how the strategy works is that whenever this blue line crosses below the lower band or a green line, this is our indication to buy. So we would buy 1 stock of Goldman Sachs, sell 5 stocks of Morgan Stanley, and then the exit strategy would be to exit at the red line here. Also, the other way around, if the blue line crosses above the upper band, this would be our sell signal. So as we can see, this month we had like 2 very nice setups. So on August 12th, if we bought here and sold, let's say here, we would buy at the green line. So this is the value of 0.5. Here we would sell at, let's say 5. So we would gain 5 spread points in this case. So if you buy, for example, 10 stocks, that would represent a profit of $50 times 2, it would be 100. Of course, our trading bot unfortunately wasn't ready at the time, but now we can see that we might see a potential setup. Now the current spread is 2.14. Here on the history chart, we see that it was even at 3.4. So potentially, if this blue line crosses above this upper band, which is now at 6.0, this would be our signal to sell the spread. So if the current spread reaches 6, we would be going short with our trading bot, and hopefully then we would exit at the red line here. So potentially we can make 6 spread points on this trade. So that's it for a strategy. So currently I'm trading the contract size of 10. So this trading bot would buy 10 shares of Goldman Sachs and then sell 50 shares of Morgan Stanley. And then I'll see how the strategy performs over the course of this week or next month. And I'm potentially looking, to increase the exposure once I'm confident with the strategy. So now that you have a rough understanding how the strategy works, I'm going to show you the exact numbers here in the console. So let me just stop the trading bot right here. So trading bot is just a Python script that is connecting to the TWS platform using TWS API. And we are retrieving data such as account balance and equity, open positions, the current market price, and so on. And using this API, we can compute the spread. So here, currently spread is 2.88 and 2.43. I have 2 values here because there is also something called the bid and ask spread. So when to buy something, the broker quotes a bit a higher price and you want to sell something, they will quote you a lower price. So if you want to buy the spread, the bid and ask spread for that would be 2.88, so slightly more expensive. And then if you want to sell the spread, it would be 2.43. So that's why I have two values here. And then we have the simple moving average and the current standard deviation. And then using the historical prices, we can then compute our buy and sell levels. So here we see that we would buy the spread if it crosses below 4.84, and we would sell the spread if it crosses above 6.0. Then we can also measure the exposure, and here I have also written the signals, right? So you want to enter a position, this is our entry signal line, and if you want to exit position, you would exit it here. So this trading bot updates every 1 second. So every 1 second, if there is a signal, it will potentially, open some trades. And now it's just a matter of time until the trading bot will start trading, and I will update you on that. And hopefully we'll have some trading setups coming soon. Hello everyone, and finally we managed to open a trade on the 27th of August. So today is Wednesday, and about half an hour after the US market opened, the current spread is now at 6.68, which is on the higher level, which means that this is our short signal for us. So we are currently minus 10 stocks on GS and 50 stocks long on MS. So if we look at the chart here, we can see that right now we see that the basis or the spread crossed above the upper limit, and hopefully this price will now return to this red line here. So potentially we might be looking at 50 or 60 US dollar profit. Of course, it can also go up and we might close in a loss, but let's just see and stay patient. So now that we have a position open, most of the time what it means is that we just have to wait and see, how the market behaves and, whether it's a loss or profit. This is no longer in our hands. And in the meantime, we can dedicate the time to maybe explain to you how the trading bot was coded. So let's now jump into our PyCharm IDE. I'm going to explain how the trading bot works, line by line. Here we are in our PyCharm IDE, and I'm going to explain how the trading bot was written. And those of you who are interested in the code, I will upload it on my website, so you can check the descriptions below for the download link. All right, so we're importing time, datetime, and pandas. And here we are also importing our TWS wrapper client class, which is a class that I have written to work with TWS API. And then we also import some configuration files that are used to connect to TWS. So before I start talking about the trading logic of the trading bot, let me show you the safety checker class. So in algorithmic trading, it is very important that we write these safety checks, because any mistake can cost us a lot of money. And what has happened to me once is that I made a bug in the algorithmic trading bot, and it just opened 1,000 trades in a single minute, and that can become very expensive. So for that reason, we are writing safety checks. And for example, one safety check is to check the post-trade exposure after we open trade. So let's say we open a buy position on one symbol, but Interactive Brokers does not update that exposure on their back end. So maybe there's some connection issue or some delay. So if for that reason, we are also checking that exposure internally in our Python script, so such that whenever Python thinks our exposure should be this value, Interactive Brokers should confirm that the value is the same. Another thing we're checking is the exposure. So here in this case, when we're trading statistical arbitrage, when we go 10 stocks long on Goldman Sachs, we want to make sure that we are short 50 stocks on Morgan Stanley. And here, this is just a very simple code logic to make sure that the ratios are always the same. And if not, it will return an error. Then we want to make sure that we are working with real-time data. So this function, check last tick update time, makes sure that the most recent tick is up to date. And so if the tick is older than, let's say, 60 seconds, I don't want to work with that data. And for that reason, if there's any error, it will return 0. If it's okay, it will return 1. And the same applies for historical data. So check last OHLC update time checks if the candles that we receive are also up to date. And if not, it will return 0. Also, there's a function check maximum number of trades per day. So in this example, I don't want to trade more than 10 trades per day because our GSMS stat arb is a swing trading strategy. Most of the trades last a few days. So I do not expect the strategy to trade more than 10 trades per day. And that makes sense because if the strategy accidentally opens 100 or 1,000 positions, we know that something's wrong. So this is just an example how we can use the safety checks to make sure that nothing goes wrong. And also what helps is, of course, trade on a demo trading account. So you should not trade live until your strategy is properly tested, of course. And so let's now scroll down to the main trade logic. So thank you for listening about safety checks. Here we are now initializing the trading bot class. So bot is equal to TWS wrapper client. Here we are just adding the configurations, and with this trading bot, we now have access to the market data in TWS, and also we can send trades to the TWS platform. So this strategy, again, is trading Goldman Sachs, which is symbol 1 is equal to GS, and the second symbol is Morgan Stanley, or MS. So the time frame that we are trading is 1 hour, and we are trading in the increments of 10 stocks per trade. So the volume is equal to 10. Here I define the ratio. So the ratio is 5. So again, for every 10 stocks of GS, we're selling 10 times 5 of MS. And here I can also define the maximum exposure. So I don't want my trading bot to open more trades than the exposure allows. Then in this section, we define the Bollinger period and the standard deviation. Here I define the safety check parameters, which is maximum trades per day, the tick timeout, and the OHLC timeout. And then I also define, the trading hours for a trading bot. So I want this trading bot to trade during the US market session. And so, so I live in Prague, right? So 15:45, in my case, is 15 minutes after the US market open. So the trading bot is allowed to trade 15 minutes after the US market open, and then it should shut down 15 minutes before US market close, which is 21:45 in my case. Here we are defining the contracts, in TWS. So contract 1 is GS, contract 2 is MS. Then we request the bid and ask prices from TWS, and in this section, we are requesting the historical OHLC data to compute the indicators. Then we wait 5 seconds for data to load, and here we initialize the safety checker class to make sure that the safety checks are running. And now finally we are in the main loop of our trading bot. So in this loop we are just constantly checking if there are any trading signals. So while true, we check if we're allowed to trade. So if the trading time start is greater than the current date time, if the trading time end is less than the current time, then we are past US market close and we want to exit the script. So these are just some time checks where we are allowed to trade. Here we are running our safety checker class. So we just might want to make sure that there is no error on with the trading bot, and if anything's wrong, then this will just continue going in a while loop without executing any trades. So here now we can retrieve the data from TWS, something like account data, the balance and equity, the positions, the market prices, OGS and MS. And using this data, we then compute the spread, right? So for example, the spread is the symbol 1 mid price minus the symbol 2 mid price times the ratio. And now we scroll down, we have our function get spread indicators, which is defined above in one of our functions here. Yeah, I think it's here. So this is get spread indicators. So we just compute the simple moving average and the standard deviation using this function. Okay, and once the SMA and STD is calculated, we can then define the buy limit and sell limit, which is basically our Bollinger Band. So our buy limit is the SMA minus the standard deviation, and the sell limit is the SMA plus the standard deviation. Then here we then define the signals. So if our spread is below our buy limit or the lower level, the signal is buy. The spread is above the limit, we want to sell. And for exit signals, so once our positions are open, so if the spread is above the simple moving average, we want to exit our buy position. If the sell spread is below the SMA, you want to exit the sell position, right? And here, this code block is actually sending the trades to TWS. So if our entry signal is 1, which is buy, and we are below the allowed maximum exposure, then we want to open a buy position. Here I'm using something called ATJ Algo Trail, which is a special algorithm to open buy position using limit orders. But in the code that I'm going to provide online for you to download, we'll just use 2 market orders because it is much easier to work with market orders than waiting for the limit. So don't be confused when you see the code online, as I want to provide a much simple logic for you guys. So if the signal is buy, we buy contract 1 and then we sell contract 2, right? And here again we see the safety checker, which is processing the post-trade event, making sure that after we place the positions that everything is okay. Same for entry signal -1, so you want to sell, then we place a sell order and then hedge that position with a buy, right? And here in the exit block, if the exit signal is 1, then we want to buy at the simple moving average and then close the other position using sell, and then the other way around, for exit signal -1, right? So this is, how the trading bot works. So I've tried to explain very fast. So this is it for today's trading vlog. So thank you guys for watching. I'm very excited to see the results of our new strategy. So I'll keep you guys updated about the results and the trades. And if you guys are interested in the detailed explanation how the strategy works, plus if you want to download the analysis and trading bot, I will post it on my website in one of my articles. So make sure to check the descriptions below. And in the meantime, I think I'm going to work on some new strategies. So besides the Goldman Sachs versus Morgan Stanley, I believe that we can also add, other types of strategies, different stocks, and hopefully, maybe by the end of next month, we'll have 3 or 5, statistical arbitrage strategies that we will be trading at the same time. So I hope that, we will get there eventually, and hopefully, we'll have a bit more, active trading by that time. So again, thank you guys for watching, and see you in the next trading vlog.